Hi, welcome to our channel Good News. The entire government debt of the United States was $30.55 trillion as of June 30th, which is around 130% of the country's GDP. Since March 2020, the total amount of U.S. government debt has increased by $7 trillion, or 30%. Due to the increase in debt, interest costs have increased significantly. Additionally, the most recent data reveals that due to the government reserve boosting interest rates in the first quarter of this year, interest payments on the U.S. federal debt climbed by 11.7% on a yearly basis to $140 billion. The American economy would not be growing at all without debt. Let's look at the specifics to see why you claim this. The U.S. federal government has often created a farce of shutdowns, and the country has numerous extremely outdated infrastructures. All of this is a result of inadequate funding and deficits without any means of insurance. Any further expenditure would be extremely difficult for the debt-ridden American economy, especially given how quickly U S Treasury bonds are being sold off. In April of this year, foreign official institutions sold a total of up to $158.3 billion in the United States, according to the most recent data of TIC, the most recent international capital flow report provided by the U S Treasury Department on June 16. The data is 2 months overdue. A country's debt. Additionally, U.S. Treasuries were sold by 27 other nations in April. It's important to note that, according to the most recent statistics from the U.S. Treasury Department, China's holdings of U.S. Treasury bonds declined by $36.2 billion in April to $1.0034 trillion, the lowest level since June 2010. China sold the most U.S. debt in April among the principal foreign investors, and it is currently driving the sell-off of U.S. debt. China also decreased its holdings of U.S. debt for 5 straight months, totaling $77.5 billion, from December 2021 through April of this year. Longer term, compared to the $1.0034 trillion held in April of this year, China owned $1.1849 trillion in U.S. Treasuries in December 2017, making it the largest foreign holder of U.S. bonds at that time. A total of $181.5 billion worth of U.S. Treasuries have been sold over the course of more than 4 years, translating to a cumulative sell-off of U.S. Treasuries valued at 1.2 trillion yuan. U.S. inflation is rising, the process of global de-dollarization is intensifying, and the allure of U.S. debt is waning, according to Goldman Sachs analysts. According to data, the U.S. CPI increased by 8.5%, 8.3%, and 8.6% from March to May, respectively. This rate of inflation has been high for a while and has just surpassed a 40-year high. Since American inflation is out of control, according to Old Debt King Gross, he is currently sharply shorting U.S. Treasury bonds. As a result, even if the U.S. economy must expand expenditure due to rising inflation, it gets harder to secure funding to cover deficits. And many sectors of the U.S. economy, including the agriculture industry, may be affected by this conundrum. U.S. farmers are seeing a considerable increase in the cost of buying a variety of production inputs, including fertilizers and agricultural gear, as a result of rising inflation and the Federal Reserve's interest rate hike cycle. The pandemic's ripple effects on ongoing supply chain issues, unstable international trade, high fuel and diesel prices, and shortages of fertilizer, other inputs, and agricultural machinery and parts have complicated an already challenging market environment for American agriculture over the past 2 years. Currently, American farmers' revenues are being undermined by the high costs of various agricultural seeds in the country. A U.S. trader, for instance, claimed that the cost of the glyphosate and glufosinate he handled this year had increased by more than 50% from the previous year. And according to Dion Letcher, owner of Letcher Farm Supply in Minnesota, Liberty and other items have been out of stock since last year, which raises concerns about next year's scenario. Due to soaring agricultural prices, a gallon of generic Liberty now costs nearly $100 as opposed to $32 last year. The aforementioned phenomena, according to U.S. media, may be the largest setback in weed control in U.S. agriculture since the introduction of glyphosate in 1971. The timeframe will be significantly longer than what our clients and farmers had anticipated, according to Scott Kay, Vice President of U.S. Crops at BASF. Numerous American farmers have reduced their use of popular herbicides, explored for alternatives, and altered their planting schedules. Furthermore, while maize may fix nitrogen absorption in the soil through legumes, it still needs extra fertilizers because of the dramatic increase in the price of artificial fertilizers. This year, American farmers will cultivate more soybeans to replace the corn that was previously produced. According to a Reuters research, 4.640 billion bushels of soybeans will be produced in the United States during the 2022 to 2023 marketing year. The greatest soybean crop ever produced in the United States will amount 4.435 billion bushels for the marketing year 2021 to 22. As a result, American farmers will need to keep hunting for new customers for their soybeans, failing which they risk going bankrupt due to their disproportionate input and production levels. It is noteworthy that many American farmers had to file for bankruptcy for a long time starting in 2018 as a result of the collapse of soybean sales and the substantial decline in exports. In the 4 years from 2018 to 2021, 1,933 American farms declared bankruptcy, according to the American Farm Federation's most recent report, which makes reference to the Chapter 12 Farm Bankruptcy Act of the U.S. Court. Although the amount may not seem like a lot, American farmers have a highly developed economy, and the failure of one farm frequently affects several different areas of the country's agriculture. This not only causes widespread unemployment in the industry but also causes a sharp decline in exports and losses. Tragic considering that the economy has been based on international markets for more than 50 years. Additionally, American farmers themselves are under a tremendous financial burden. According to the statistics, 97% of U.S. agricultural revenue is owed by the country, which is a 32-year high. As a result of a lack of collateral or loans that some American farmers regarded to be excessively risky, an increasing number of American farmers have recently been denied funding. This has prompted some farmers to sell a portion of their land, go into foreclosure, or declare bankruptcy of their property, to seize it, or to declare bankruptcy. To make matters worse, the U.S. Department of Agriculture projects that U.S. agricultural income in 2022 will be $95.2 billion, which is only from 2012 to 2021, in the context of rising U.S. inflation and the U.S. economy's failure to deal with American farmers' bankruptcies. $134.5 billion, or a median of $58.6 billion. That implies that despite this year's rise in food prices globally, American farmers haven't benefited in the least. American farmers' incomes are exceedingly erratic. According to Reuters analysts, the reason why American farmers have collapsed into bankruptcy is because they overestimated the power of major international purchasers to create new suppliers in a particular wave of the past. For instance, in the beginning of 2019, enormous quantities of U.S. soybeans, sorghum, corn, red wine, cheese orders, and more were left stranded in the fields. It should be noted that during that market cycle, American farmers suffered. Therefore, to increase market share for American farmers who plant, many American farmers may be looking eastward at this time, anticipating steady orders from important clients. For instance, a number of media outlets reported on June 20 that China imported 1.7826 million tons of soybeans from the United States in May, using information from the customs online inquiry site. China bought 16.77 million tons of soybeans from the U.S. between January and May of this year, compared to 21.51 million tons during the same time previous year. 16.77 million tons of U.S. soybeans, the equivalent of the first 5 months, landed in China. China imported 66.52 million tons of grain from January to May, according to the most recent statistics available from the BWC Chinese website, which is just 0.2% less than the 66.63 million tons imported during the same time previous year. A total of 38.04 million tons of soybeans were imported from January through May, which was just 0.4% less than the 38.2 million tons imported during the same time previous year. This demonstrates that despite an increase in grain prices worldwide, the amount of grain and soybeans imported into China is steady. Additionally, it indicates that exporters and farmers alike love the Chinese market. 66.52 million tons of grain and 38.04 million tons of soybeans were transported from abroad to the Chinese market in the first 5 months. According to analysts, the grain and soybean shipments stated above will provide American farmers with something to be excited about. Due to the excessive level of U.S. debt and growing U.S. inflation, American farmers are experiencing weaker profit margins and must continue to gain market share and new orders. Thanks for watching in this video. You can add your ideas or suggestions below. Please keep following our channel and like our videos.